Imagine walking into a store with a cow and trying to buy a loaf of bread. Sounds ridiculous, right? But thousands of years ago, that's exactly how trade worked. Before banks, before credit cards, before Bitcoin, before AI, human civilization depended on one simple question. What is money? The answer has changed again and again, reshaping empires, creating billionaires, starting wars, and transforming the way every person on Earth lives. Today, we're traveling through more than 5,000 years of history to discover how money evolved from simple coins to artificial intelligence and why the next revolution may already be happening. Because if you understand where money came from, you might better understand where it's going. Chapter 1. Before money existed. Long before coins or paper notes, people survived through barter. Need food? Trade your sheep. Need clothing? Exchange grain. Need tools? Offer pottery. Simple, until it wasn't. Imagine you grow apples, but the blacksmith doesn't want apples. He wants fish. Now you have to find a fisherman willing to trade for apples before you can buy the tool you actually need. Economists call this the double coincidence of wants. Trade became slow, inefficient, and frustrating. As civilizations grew larger, people needed something everyone would accept. That changed everything. Chapter 2. The First Money. Around 3,000 to 4,000 years ago, different civilizations began using valuable objects as money. Shells, salt, livestock, even large stone discs on some Pacific islands. But one material stood above them all. Metal, gold, silver, and copper were durable, portable, difficult to counterfeit, and widely desired. Around the 7th century BC, the ancient kingdom of Lydia, located in what is now Turkey, is widely credited with minting some of the world's first standardized coins. For the first time in history, money had an official value. Trade exploded. Markets expanded. Businesses flourished. And governments quickly realized something important. Whoever controlled the money controlled the economy. That lesson has shaped history ever since. But coins weren't the final evolution. The next breakthrough would make carrying heavy bags of gold almost unnecessary, and it would change the world forever. When coins became the world's primary money, trade exploded. But there was one major problem. Coins were heavy. Imagine traveling hundreds of miles carrying bags filled with gold and silver. Merchants risked theft, and transporting large sums was slow and expensive. The world needed a better solution. Chapter 3. The Birth of Paper Money. More than 1,000 years ago, during China's Song dynasty, merchants began using paper notes that represented stored value. Instead of carrying heavy coins, people could exchange lightweight paper that could later be redeemed for money. It was a revolutionary idea. Paper was easier to carry, safer for long journeys, and it allowed trade to expand faster than ever before. Centuries later, paper money spread across Europe, helping fuel international commerce and economic growth. But paper money introduced a new challenge. Its value depended on trust. People accepted it because they believed someone else would accept it tomorrow. Without trust, a piece of paper was just a piece of paper. Chapter 4. The Rise of Banks. As trade continued to grow, banks became the backbone of the financial system. Instead of hiding gold beneath the floor or inside a chest, people deposited it with trusted institutions. Banks kept money secure. They transferred payments. They exchanged currencies. And they lent money to entrepreneurs, farmers, and businesses. Those loans helped finance new ships, factories, inventions, and eventually entire industries. Money was no longer sitting still. It was moving through the economy, helping create jobs, businesses, and innovation. Chapter 5. Governments take control. Over time, governments established central banks to help manage national currencies and support financial stability. Central banks influence interest rates, oversee the money supply, and often act as lenders of last resort during financial crises. This gave governments and monetary authorities powerful tools to respond to recessions, banking panics, and periods of high inflation. At the same time, these decisions could affect everyone. A change in interest rates could influence mortgages, business investment, savings, and even employment. Suddenly, money wasn't just something you earned or spent. It became a tool used to guide entire economies. But the biggest transformation was still ahead. The arrival of computers, the internet, and digital technology would change money faster than anyone imagined. The world had already gone from bartering sheep to carrying gold coins, from paper banknotes to modern banks. But over the last few decades, money has changed faster than at almost any other point in history. And the biggest transformation may still be ahead. Chapter 6: The Digital Revolution. Think about the last time you paid for something. Did you hand over cash? Or did you tap your phone, swipe a card, or pay online? Today, in many parts of the world, most money never exists as physical cash. Instead, it lives as digital numbers stored securely in bank accounts and payment networks. With a few taps, you can send money across the city or even across the world in seconds. Online banking, mobile wallets, and instant payment systems have made transactions faster and more convenient than ever before. For millions of people, a smartphone has become their wallet. Money is no longer something you carry. It's something you access. Chapter 7: The Rise of Cryptocurrency. Then came another major innovation. In 2009, Bitcoin introduced a new idea, a digital currency that operates on a decentralized blockchain network, rather than being issued by a central bank. For supporters, cryptocurrencies represent greater financial independence and new ways to transfer value. For critics, they can be highly volatile, making prices rise and fall dramatically in short periods. Since then, thousands of digital assets have emerged, while governments around the world continue exploring how cryptocurrencies should be regulated. Whether crypto becomes a larger part of everyday finance or remains a specialized asset, it has already changed the global conversation about what money can be. Chapter 8: The AI Economy. Now we're entering the next chapter. Artificial intelligence. AI is already helping detect fraud in seconds, analyze financial markets, automate customer service, and personalize budgeting tools. Businesses use AI to forecast demand. Banks use it to identify suspicious transactions. Investors use it to process enormous amounts of financial data. And consumers increasingly rely on AI-powered assistants to help manage their finances. Some experts believe AI could make financial services faster, cheaper, and more accessible. Others warn that it also raises important questions about privacy, cybersecurity, and how much decision-making should be automated. The future won't be shaped by AI alone, but AI is likely to become an increasingly important part of how money moves through the global economy. Conclusion: from ancient shells to gold coins, from paper notes to digital payments, from banks to blockchain, and now, artificial intelligence. The history of money is really the history of human innovation. Every generation has reinvented how value is stored, exchanged, and trusted. The next breakthrough may not be another coin or another banknote. It could be intelligent systems that help people spend, save, invest, and build wealth in entirely new ways. One thing has remained true for thousands of years. Technology changes. Money evolves. But the people who understand these changes are often the ones best prepared to seize new opportunities. If you enjoyed this journey through the history of money, don't forget to like the video, subscribe for more fascinating stories about finance, history, and technology, and let us know in the comments. What do you think money will look like 50 years from now?